Welcome to this explainer. Today, we're decoding the highly complex board game of our economy and transforming your financial anxiety into outright empowerment. Look, if you've ever felt like the financial system is some exclusive secret club with rules you were just never taught, you're in the exact right place. We're going to break it all down, step by step.
So, picture this. You're slaving away all month, maybe flipping burgers, maybe grinding at the office, and you are expecting a solid $2,000 deposit. But then you check your account, and invisible forces have swiped a huge chunk before it even cleared. You look at your pay stub, and it is practically bleeding money. Where did it go? Who took it? And honestly, why are you expected to just smile and say thank you?
Well, here's our roadmap for today to figure that out. Number 1, the rules of money. 2, the silent financial engines. 3, the economic roller coaster. 4, the shadowy trust algorithm. And 5, the ultimate wealth cheat codes.
All right, let's jump right into Section 1, the rules of money.
To win absolutely any game, you've got to start with the board and the house rules. That means the money we play with, the entry fee, and the matchmakers. Let's look at that entry fee first. Taxes might feel like this weird modern ritual of just throwing your money away, but fundamentally, they're the cost of civilization. They're funding the roads you drive on, your local schools, and making sure your favorite taco truck isn't a health hazard. The government takes a slice of what you make through income tax, what you spend through sales tax, and even the money your money makes while you sleep, which is capital gains. Then you've got Social Security, basically forced retirement savings, and Medicare, a health insurance tax. The craziest part about all this? When it comes time to file, the government usually knows exactly what you owe, but they make you guess. Guess right? You're good. Guess wrong, and you're in trouble. It's incredibly frustrating for sure, but it's the required entry fee to keep society running.
Now, consider the whole concept of currency itself, because honestly, money isn't actually real. It is entirely a social construct. Think about it. A dollar bill and a wooden stick from your yard are functionally the exact same thing. Neither has inherent use. The only difference is our society's shared belief and trust that the government-printed, bank-regulated dollar has legitimacy. We all just collectively agree it has value, and that's what lets us trade easily and organize the world.
So where does this imaginary trust-based paper actually live? In a bank. But our expectations of banks are wildly inaccurate. When you deposit $1,000, it doesn't just sit in a metal box with your name on it, guarded by a dragon. In reality, the bank keeps just a tiny fraction of it and lends out the rest, say $900, so somebody else can go finance a jet ski. This is called fractional reserve banking. The bank is really just a middleman. They're a matchmaker, connecting people who have cash with people who need it, and they make their profit by charging the borrower a slightly higher interest rate than they pay you for holding your money. Which brings us perfectly to Section 2, the silent financial engines. What exactly are these invisible engines? Well, let's start with interest. Interest is simply money's way of charging rent to exist in someone else's hands. If you borrow cash, interest is the price tag for using it. If you lend or save, it's your reward for being patient. Whether it's a flat fee, known as simple interest, or the cloning of your dollars through compound interest, it is the silent engine behind both massive generational wealth and crushing, inescapable debt. Let me give you a super real, kind of dangerous example of how this works against you. Imagine you owe 20% interest on a credit card. You're out, you buy a quick $12 burrito for lunch, but you miss a payment.
Thanks to compound interest, the interest you owe literally starts earning its own interest. That slow burn turns a tiny mistake into a financial fire, and suddenly that quick meal is snowballed into a $50 regret. If you're paying high interest, you have to kill it fast. It is absolutely your worst enemy in this game.
The other invisible force we have to talk about is inflation. Now, inflation isn't an overnight explosion. It's a slow, quiet erosion. Your $5 bill is still technically a $5 bill, but over time, it buys way less gas and way fewer instant noodles than it used to. It's exactly that feeling when you open a bag of chips, it's half empty, and somehow it costs 30% more than it did last year. So why is this happening? Well, sometimes it's a demand issue. If 2,000 people want a new TV, but a store only has 1,000 in stock, they're naturally going to raise the price. Sometimes it's a supply chain hiccup that just makes it more expensive to produce things. And sometimes it's literally just human expectation. If we all think prices are going to go up, we rush out and buy more now, which actually drives the prices up even faster. A predictable 2% inflation is totally fine. It's a sign of a healthy, growing economy. But when it spikes, savings die and wages lag behind. That is when the government steps in and raises interest rates, which makes borrowing expensive and cools off all that spending.
Let's move on to Section 3, the economic roller coaster.
Here's the thing you need to know. Economic downturns are not the end of the world. They are just weather systems in the larger climate of finance. We call this weather system the recession cycle. Think of the economy as a massive house party. During the boom phase, everybody's dancing, drinks are flowing, credit is super cheap. But eventually, reality hits, the peak is reached, and suddenly the music just stops. That's the bust. Layoffs happen, spending freezes, and a recession forces a really painful but completely necessary reset before growth can actually resume. It's just the economic cycle clearing out the excess so a brand new boom can begin.
All right, Section 4, the shadowy trust algorithm. How does the financial system actually judge you during all these booms and busts? It relies on a shadowy trust algorithm, better known as your credit score. Ranging from 300 to 850, this three-digit number pretty much decides your financial fate. It dictates whether you get a house, a car, or slapped with a soul-crushing interest rate. But here's the secret they don't tell you. This number is not about your actual wealth or how much cash is sitting in your checking account. It is purely a trust metric that lenders use to predict if you're going to pay them back. Below 580, the system views you as a walking red flag. Hit above 750, and you are sparkling with adult credibility. The algorithm itself is calculated using your payment history, how much credit you're utilizing, the age of your accounts, your credit mix, and any new credit applications. Honestly, think of your credit score like a high-maintenance pet dog. It requires constant, careful attention across all these areas. Ignore it, and it makes an absolute mess of your life. Feed it and take care of it, it helps you buy a house. And this means you can have zero debt, total financial freedom, and still have a completely trash credit score if you have no borrowing history. It is a rigged game of proving that you know how to handle debt.
Okay, time to play some offense. Section 5, the ultimate wealth cheat codes.
We have covered the defenses and the mechanics, so let's get into the good stuff. The first cheat code for building actual wealth is understanding value. Value is essentially a super profitable illusion. Let me explain. A chunk of gold isn't inherently more useful than a regular rock in your driveway. A Gucci bag is literally just a bag to hold your stuff. Wealth is generated by creating or possessing something that humans simply perceive as highly valuable. Steve Jobs didn't just build a phone, he created a device with such immense perceived value that millions of people gladly handed over thousands of dollars for it. If you want to make serious money, you have to figure out how to provide a massive amount of perceived value to society.
Cheat code number 2 is investing. Because inflation is constantly eating away at your cash, you cannot just trade your time for money. You have to trade your money for more money through diverse investments. That means buying stocks, which are just tiny slices of ownership in companies. Or bonds, where you get to play the bank and loan your money out for interest. You can buy funds, which are automated collections of these assets. Or real estate, where you buy a property and let somebody else pay to live in it. Investing is basically making your money put on work boots and go to a job of its own. Now, I know a lot of people are terrified of investing because of the risk. Markets do go up and down, that's true. But the real danger isn't losing money in a temporary market dip, it's never investing at all, and watching inflation quietly steal your future purchasing power. Investing at roughly 7% annual compound interest acts as the ultimate financial cheat code. It is your absolute best unpaid employee. It just slowly duplicates your money over decades until you wake up old, rich, and incredibly secure.
And that brings us to the final and undoubtedly most important cheat code of all: time. Time is the greatest wealth-building force in the world. Wealth is not built in days, guys. It is built in decades. Most wealthy people didn't win the lottery or beat the system. They just used the system. They took a little bit of money, they invested it consistently, and they let compound growth do its thing for 30 years. That right there is how ordinary people with completely normal paychecks end up retiring with 7 figures.
But here's the catch. You do not get an unlimited supply of time. Every single day you wait is a missed cycle of compound growth. So now that you actually know the rules of this rigged game, the only question left is this. How are you going to use these tools to build your own wealth and rig the game back in your favor starting today? Thank you so much for joining me on this explainer. Start making your time work for